All right. Good morning, good morning. Just trying to make sure that everything's working here. Volatility, huh? A lot going on already today. Let's put a chart of the S&P cash up just so we can take a look at that real quickly. Let's see. Here we go, here we go. All right, yes, an apple has fallen from the tree. Yes, we have a lot of things to go over here as the Bank of England just intervened a bit to try and get the U.S. dollar down, try and get rates under control, currencies everywhere. This is the jungle, my friends, my dogs. My name is Scott Redler, Chief Strategic Officer at T3 Live. Welcome to the 630 Club, where I try and go over what's happening around the world, what the narrative is, and there's many narratives intertwining. We've been in this bear market corrective phase, for months on months, some over a year, reaching levels from 2020, from 2017, from 2008. It just goes to show you the markets will do what it wants to do. You just got to figure out the complexion and be out of the way and pick your spots and know your time frame. But before we, let's see. I might have two things going right here. Hold on a second. Let me see. Let me see what's over here. Hold on. Let's see. Hold on. All right. Anyway, give me two fingers if the sound is good. Two fingers. Give me one of these. Actually, you can't even give it to me. I can't even see you. Anyway, it's 6:33, September 28th. Let me say hello to some of my dogs around the world. Can you hear? Do I have to turn this on and put it back on? All right, we got It's in the house. Oh, there you go. See? Very creative. That's what we have to be. A little creative in this world. Creative to survive, creative to thrive, and disciplined and responsible to stand your ground and get ahead. That's what we got to do. We got Edison, New Jersey in the house. We got Texas in the house. Who else we got? All right, thanks. It's always looking out. Cheers to you. It is Wednesday morning, and there's a lot going on. I woke up this morning, and you saw the futures down 40 handles, and I was like, are we going to get below and stay below the recent area and finally get some acceleration, finally get some real fear, finally get like some fast and furious movement, in the equity arena versus just the grind lower. And that's what traders are having a problem with, is that, you have a very grindy type feel where there's no true capitulation, there's no true acceleration. It's just, liquidation, right? Taking the fluff out. The central banks around the world are trying to undo everything that they did, right? During COVID, what did they want to do? They wanted to friggin' make sure the economy survived, make sure people, were able to live their life. And now what they want to do is they want to just, slow it all down, bring down asset prices. And there are a lot of signals technically every which way, to reduce risk depending on your time frame. And there'll be lots and lots of ways to make a lot of money in the next 3, 6, 9, 12 months, maybe even 2 years. But anyway, for today, you have to figure out, are you trying to make a living trading to get paid at the end of September, or for the third quarter? So anyway, with that being said, the SPYs, if you take a quick look here, are only down $1. They've been all over the map. They were down 4. They were just green. Now they're down 78 cents. And it seems like we're going to be playing with this 36.23 level again. Yesterday, it felt like they were trying to do what I call a red dog reversal. You guys know what a red dog reversal is? I'm sure you do. Red dog reversal is when they try and do a fake out move after a directional move, where they try and catch some people off sides. And yesterday, if you look at the S&P cash, they tried to get it below 36.36. We went to 36.23. They tried to get it back above this spot, but there was no demand. There was no, like fast and furious pushback. All it was, levels playing with each other a little bit, where an oscillator that, after 4 down days was down 90. That's why we say it's really hard to be short, when an oscillator is down 90 or 100, because like that, sometimes, it burns you. You have to strategically be short the same way you strategically try and find the little bit of bounces if you're trading tactically. Or, you play one side and not play both sides. Playing both sides of the market is really hard. Everyone tries to give me a hard time a little, because I like to, I tend to make more money on the long side than the short side. So when I'm sitting here for multiple months in 95% cash in all 4 of my trading accounts, trying to be tactical, I don't mind little paper cuts, because when something turns, I'm going to be there for a great active sequence. I'm going to make 6 figures plus, very quickly. So anyway, and then as far as long term, that's a whole nother story. We talked about the blood in the street account and macro. But for active today, we're pretty much dancing around this spot again. So we shall see. What you have to watch is, the TLTs. Do the TLTs really go green and push? On the news from the Bank of England, you had a quick move up in the TLT. TLTs at new lows. The computers are programmed to sell, like yesterday. Like yesterday was an odd day. Stocks were trying to rally a little bit. It was green in the bios, green in ARK, green in some semis, green in some tech, and then you had the computers programmed just to sell because the U.S. dollar was at highs and the TLTs were at lows. So you had this back and forth, which just created a choppy mess for the longs and the shorts. There are some people probably saying, hey, I'm going to get paid shorting underneath here. We've been here for 2 days, and didn't happen. Same way we got back above 362, 363 in the SPYs yesterday and thought, hey, maybe we could have a last 45-minute rally, relieve some pressure, and that didn't happen. So any which way, Bank of England subscribes to Carter Worth. Why? Because he called it. Listen, I have a lot of macro notes, and the last 3 days, my macro guys have been saying, look out for a surprise raise by the Bank of England, to help, what's it called, stabilize our currency or whatever it is, and that would bring the U.S. dollar down, and then maybe, we could relieve some pressure. Instead, they didn't do that because our economy's in shambles, so now they're going to buy bonds. So everyone's going to do what they need to do now, so maybe you have to listen up. The key is to know what to do when you hear a certain change of narrative. So this could be the start of the change of narrative. Same way, a day or so ago, our Fed governor started to say, hey, well, we are taking the strong U.S. dollar into consideration in our decision-making process, which we did have a quick little rally based on that, but, it didn't last, meaning that, okay, we've raised rates 3 times, pretty large raises. It's going through the economy. It's going to take time for the economy to come down like it is. But anyway, here we are now. If you look real quickly, the SPYs are down 19 cents after being down 4. It's 6:39 in the morning. There's so many different levels of movement. Like we were talking on the Alpha team, every half an hour is like a different day. Not a lot of commitment to each half an hour. Sometimes you're getting these bounces that you can make 30 handles in the S&P cash, long or short, a little bit of everything. Sometimes, you're getting certain stocks that just made lows in the year, giving you a big move, and then they just fail. So, bottom line is, trying to be a coach, take your trade, net money, and not every day is going to be a big inflection point. But for today, again, here you go. Here's 36.44-ish. Which was above 36.36. This is your new low for September. We'll see if it holds for a day or not. You go to your weekly chart, which we've had to see a lot of weekly charts, and yes, I did put 50% of my wife's cash blood on the street retirement account back to work into this area, and I'm saving the other half for maybe this area, which is only a maybe. Still just a maybe. We haven't got there yet. Tesla's AI day on 9:30. Okay. Okay, that might be something. But anyway, 3385, 3200. In order to get to here, okay, I have a very sophisticated technical term. It's got to get below and stay below. Why get below and stay below? Because that means that the sellers have power at a certain area. If you can't get below and stay below, that means there's a little shift in power, and it could be just for a day, it could be for a week. Remember this? Area couldn't get below and stay below, and you had a huge rip-roaring 2-week rally where a lot of people lost a lot of money short if they didn't stay, and a lot of people made a lot of money long, and then finally got below and stayed below 39.03 to get back to here. So here's your level, 36.36. This is now 36.22 because I didn't update this from yesterday or whatever I said it was. And now the question is, does this news change the narrative a little bit as far as yields? Because a lot of people are saying, obviously, the 10-year, the 2-year, everything's above where the Fed said it was going to go. So mechanically, things have been pushed higher, like the yields at 4.75 or higher than that, whatever it is. So anyway, so this is the thing. If we get some kind of oversold bounce, if you have 37.15, and then this is big resistance, 38.37. If we can't bounce today with a little bit of intervention. I don't want this intervention anymore. Let's let supply reach demand. Let's let some equilibrium happen. If the Fed wants to friggin' really tame inflation, the 13 states shouldn't be giving out inflation relief checks. They should be letting people who need to go back to work, and let supply reach demand and let things shake out and get to a more stable spot versus everything just manipulated by the central bankers, who obviously didn't do the best job, right? They threw money at the entire world to stabilize the world and give it growth, and they made it go too long, and now, anyway, they're doing what they're doing. So they say you can't fight the Fed. For 10 years, I was a buyer when the S&P was above the 821 day, and now it's different. So things change. Remember, the 821 day rule, wasn't this a nice trend from the low in 2020? You had a nice steady trend, and then it broke right here. So technically, even on the weekly, it told you get out of the way here. Then you had your lower high. Then you had your head and shoulders top pattern. Here was a nice big move lower. Here was your retest. Obviously, they pushed the envelope because the computers wanted to make everyone feel bad about themselves. But we caught that red dog reversal sell. That's when she went up full cash and netted 12% for her intermediate account. And now here we are. Inflection points. That's what we always have. Sometimes, actually, we don't have inflection points. It's just a day in the life, but sometimes, it leads to something different. And that's what we're trying to measure. So anyway, what could be different today? Well, obviously, everybody knows the Apple news. Apple's not ramping up iPhone production. Some analysts are coming out and say, well, we don't care about their units. It's about the Apple Store and their the reoccurring revenue. Well, we'll see what happens here today with Apple. Apple's going to be very interesting. Okay, Apple has been a place for money to hide. Okay, Apple has been well off these lows. Apple, tried to hang in there for a day or so. And if you remember the last few days, I've been saying, hey, as long as Apple holds 148.50, it can keep some of its relative strength. It's below all the moving averages. Thank God it closed with a doji, so no one in my community is long it. I guess if it would have closed better and the market closed better, I'm sure people would have been in Apple. And right now, Apple's down 5. Okay, Apple didn't bounce back with the futures. So you have 146.71, which is below 148.50, the small double bottom. If it stays below 148.50, remember, stays below, you don't want to be long it. If anything, some people might try and fade a bounce. If it reclaims 148.50, and people don't really care because they say it's not the unit story, it's the recurring revenue story, or it's this story, it's that story, then the market's probably going to, probably have a better day. If it stays below, your next level is 143.50, and then you have a lot of room down here if it wants to get down to this quadrant. Okay, Apple, is very heavily in the SPYs, very heavily in the Qs. So, if it stays below this and people change their narrative on Apple because the PE is high compared to, history for itself, then you have this, and then you have that. If it reclaims this, chances are, the bears aren't going to have much fun, trying to get below the recent lows. Tesla's also been strong. Tesla, hanging out below 289, well off the lows here. But that kind of could change also. Just shows you anything could change. Is Chase still on Apple? Yeah, Chase is still on Apple. He owns it from 103 from about 3 years ago in his Robinhood account that he hasn't looked at. He was probably like every other kid between 14 and 25 who were making so much money in 2020, and then all of a sudden things didn't work and he started to lose interest. And just like that's why I was really pissed off at Portnoy. Everyone's like, Red Dog, why do you not like Portnoy? He's a fun guy. I'm like, A, I think he's very crass, and B, for 7 months he said stocks don't go down, and stocks do go down, and you need a process and a plan. And he heard a lot of investors between the ages of like 13 and 30. But anyway, I guess better to learn a lesson when you're younger that stocks do go down. We all learned our lesson in the year 2000. I'm an old dog now. I'm 50. When we went to NASDAQ 5,000, right? I became a trader in 1998. I played NASDAQ from, I just got there, NASDAQ 4,000 to 5,000. So I was thinking stocks can't go down. And then from 5,000 to 1,000, they go down. But that taught me, very valuable lessons on trading and investing and time frames. But then what also taught me a great lesson was 2007, 2008, as ugly as that was, that's actually when my wife built her blood in the street account. All right, she put money in her 401k from 2004 to 2012, age 26 to 34 or so, and built up well over six figures during the crisis. She didn't try and time it. Everyone's like, well, I'm staying out of the market. I'm going to time this. I'm like, you're doing that with your 401k and your IRA? It's like, yeah. I'm like, well, I know people who actually took their money out when I said to Mark Haynes that we're going to drop 10%, and I think the S&P was like a 1,300. It went down to 666, and guess what? They haven't been in the market since. So long-term, 401k money, stay the course. If you're 60 years old or less, it doesn't really matter. And also, if you're just started out working, this is a great time for you to put money in long-term. I'm not in the camp that we're going to be making an all-time high in the S&P in the next 3, 6, 9 months, but probably in the next 2, 3 years, or maybe 4. So it doesn't matter for you. Just put in what you could afford. But anyway, we'll see what happens with Tesla. Tesla is trying to be like last. Actually, it's not even. Tesla's not bouncing either. Tesla's at 277.55, above the 272. Remember that little trade we had on Monday? That was a great trade from red to green, and we'll see if it stays weaker. It'd be kind of cute now if Apple and Tesla are on the weaker side today, and then you get the broken names that already made lows of the year start to bounce. What's a broken name that already made a new low in the year that's been leading us lower? Well, I could tell you a bunch of them. Bottom line is, you look at Meta, right? Look at the weekly charts. Meta, to me, is getting a little bit more interesting. Okay, if you look at Meta, there were many times to get out of the way with Facebook. Up here, there, here, and then even when it broke 183. But now it's getting closer to an area that I think could be worth a look. This is 123. Remember, everyone I said it can go to 137 to 123. When it was in here, people thought I was out of my mind, but weekly charts tell you. I bumped up my 401k weekly back in March. Which March? That was a little early. Where are we now? We're in September. Oh, you mean in 2020? I hear you. Me too. That's when I went from $500 to $750 a month for Chase's $529. He's in 8th grade. Listen, if I was a junior or senior, if I had a son that was a junior or senior, kind of this market cycle was not great for you. Obviously, you thought you had a certain amount of money for your college funds, and it's been hit pretty hard, and it definitely could be a little bit complicated for you or stressful. Bottom line, maybe have your kid take out a loan so it gets forgiven, because that's what they do. They give out free money these days. No accountability on anyone creates this friggin' moral hazard where universities' prices are never going to come down. But anyway, we won't talk about that. Bottom line is, today will be interesting. Maybe Facebook's worth a look because it's been so weak. It has nothing to really do with Apple. So that could be something. It's been down for multiple days. Here's your low, 134.12. So perhaps this can go right to green. We'll see. Right, Biden will be out of here very soon. Google, people are kind of pissed off at me when I said Google could head down to the 87 to 89 level. Okay, and that was when it broke 107. Right now it's still kind of hanging right here. Look at the weekly charts in these things, but I went through this. I remember when Sun Micro, I remember when Cisco, I remember when all those names, were the best of the best, JDSU, you name it, and they all still got beat up during bear market cycles. Doesn't matter who it is or what it is. But anyway, what was the low yesterday? 96.87. Every day, new lows. All right, that doesn't really matter much. Yeah, CMGI, right? Remember that one? The incubator of all the internets. That's kind of like what ARK is now, the incubator of high growth that's getting its butt kicked. I can't believe she's launching another fund for people with like little money. Like, why? She ran out of people and institutions that think that she has any credibility. Whatever. Crazy, crazy world we're in. Just don't sell us. I'm not. I'm just going over levels, boys and girls. People like, how did this happen? You can look at the weekly charts and see so many technical ways that these stocks change composure on a daily, weekly, and a monthly level. So now we're just trying to figure out how to actively make cash flow and more in an intermediate. People are like, what stocks can I put away for the long term? I'm like, to be honest, you're 32 years old. I'd rather you just put in S&P funds every single month, because some names will never come back. Some will rebuild and outperform, but you're better off if you're not looking at the market every day. You should be just doing S&P funds every single month, and every time you see the markets in turmoil segment, we're down over 20%. If you have some money, throw in a little bit of extra. So when at some point when the S&P makes new all-time highs, you'll be there for it, and you'll create yourself some alpha. So anyway, we all know what's been controlling the narrative. What the TLT's been controlling the narrative, made new lows. I actually yesterday, some people thought I was a little nutty, but whatever. I sold some puts for next Friday. I sold the 99 puts, thinking that, hey, this is starting to get a little mechanical and it's gonna be hard for yields to stay up here. So I sold some puts for the TLT. So this would actually help me if we get some kind of bounce here. So this way I can keep the premium. And Carter, who pretty damn good at what he does, did say we're a little extended, which we are. Any stock that's extended from the 8-day, okay, even in bull markets, I would always say you're not buying a strong stock on day 4, day 5 up. If anything, you're trimming and you're waiting. Same way, that's why we're saying, with the market down here, when you're that far away to the downside from the 8-day, usually it comes back to it also, right? So, when we're looking at Microsoft, it came back to the 8-day. What a quinky thing. Even though it's been trending lower, and this was when you should have been out of the way when this active sequence ended, it comes back to the 8-day. It comes back to the 8-day. But look, the 8-day has pretty much been controlling it from 289 down to the low. So what was the low yesterday in Microsoft? 234.50. So that's your new point of reference. Does it reclaim it or not? See, I think that the biggest thing that has saved me from big gushers, yes, I've been having some paper cuts, is get below and stay below is a way to stay short and figure out who's in control. Get below and then get reclaimed. That's usually a battleground for cash flow. Get above and stay above. That's also a way. Like a lot of people yesterday with the Qs. The Qs got back to the 3-day pivot and couldn't get above and stay above. The day before, here you go again, got above Friday's high, filled the gap, couldn't hold it. So you could have been a buyer from red to green on Monday, added through this little pivot, and then sold into that, or got short there. Whatever it is, how you choose the way you want to do it. The Qs right now are what? Back down $1.50 because obviously Apple. So the Qs will probably be the weaker sector today, depending on how they treat Apple, which I already gave you the level. So the Qs were not at the lows of the year. The lows of the year is 269.29. Okay, so we'll see, if that remains intact. We were talking yesterday in the Alpha team how we at least test 269. If we test 269, that means the SPYs are probably going to 355 or lower. But anyway, now you have 272.02. Okay, the Qs are still above it. So the Qs are hanging on by a thread here to this double bottom. Okay, but again, it's very hard to tell what oil stocks. Energy sucks. Excuse my French. Everybody said, oh, you have to be in energy, you have to be in energy, you have to be in energy. Energy broke its trend right here. The XLE broke that accelerated trend. Then you had another new little active sequence that broke this wedge pattern right here at 79.45. Maybe today, and then you still have this pro gap to the downside below all the moving averages. The energy names are not a spot to hide it. You could trade it, and if we're gonna rally, if we're gonna get some kind of fourth quarter rally, energy, in my opinion, is not going to outperform. It's probably going to be, high growth. It's going to be mega cap, and it's going to probably be the bios. If you look here, there's a small divergence, very, very small divergence. If you look at ARK, we sold. That's great. If you look at ARK here, there is a small divergence here where, the lows of, remember, ARK led us to the lows of the year. So did the bios. And if you remember, in June, when the SPYs and the Qs made new lows, XBI did not, and then you had a really nice active sequence. So here we are with the XBI above the June lows, above the May lows. So you look for something that gives you a little bit of a hint that, hey, maybe the bios could be better than most other sectors. Because yesterday the SPYs made new lows on the year. Did the XBI? No. I'm sorry, this is ARK. Did ARK? No. ARK and XBI kind of like remind me of the same type of thing. So that did not, and neither did. Here's the XBI. Look how much higher the XBI held. This is your May-June double bottom that had a divergence. And now this is where the XBI is, which is the bios, holding well above it. So if we hold around here, there's a small little divergence where the XBI and ARK should be something you focus on. Okay? And every day kind of changes. Dow trends are leading us down. Yeah. Kramer pumping. Don't listen to Kramer, guys. I'm sorry. Some people asked me the other day, why haven't I been on with Cramer? I used to be on with Cramer, for a bunch of years. Well, you want to hear the story? So the story is back in 2013-14, Doug Cass wrote an article that Apple was riding to the court. Get out of Apple while you can. And I called him irresponsible because I'm like, what are you talking about? Apple may go down for a month, but you're trying to get investors out of Apple. I'm like, it's the best company in the world. Obviously, it's tripled since then. And 2 days later, Cramer says, you can't talk to Doug like that. And I'm like, I'm just telling him he's being irresponsible to the investing public. And boom, I was just like, I got into a fight with Doug Cass and their boys and whatever. But anyway, if you do remember, I don't know if you guys have, I don't even watch really, TV except for, every now and then. Like my TV won't go on until 9:10 today. I'll look at macro news and I'll look at how we react to it. I don't care about everyone's opinions. Right here on this day, if you remember, the CPI, after this move into the CPI, I had about 7 or 8 leftover positions, only 25%. And this is the day that, most people on TV, including Jimmy, was like, this is an overreaction. You should be buying just because since CPI is boom, it's a lagging indicator. And, a lot of people got crushed from 400 down to 360. That's 40 handles and 40 points in the SPYs. So don't listen to, the so-called experts. You got to learn yourself and figure out what you're looking to do, what time frame you're looking to do it on. If you're, getting older like me, you have to do a lot of time frames. You have to have money every month that goes in a 401k, so you retire, you have a nest egg. You have to have money going into a 529, so when your son's ready for college, you can pay for it unless you want to get free money like everybody else. And if you trade for a living, you better know how to net money, use your tier system, get prepared, be up as early as, most of us are who try and approach the market with a process and a plan and figure out how to put it together. And sometimes are harder than others. Okay, this has been a very, very, just not a very easy environment on the mind. Every day, the market could play with your mind, whether you think you need to be short, long, this, that, if you're missing a big trade or a big trade's lining up. Or, a lot of times, recently like Monday, I was up a lot of money in the first 20 minutes, and then you give back 3/4 of it and you get pissed off, and then you revenge trade, and just don't do any of that. Figure out a way to stay relaxed, look at the trade in front of you, execute. And sometimes there's a day when you shouldn't do anything. There's no edge. You got to figure out what your edge is, long or short or in cash, and wait for your spots and wait for your setup and pounce when it's ready. The only way you're going to do that is if you have brain cells left and you don't listen to 1,000 different opinions that are usually opinions. And an opinion is an opinion until the market confirms it. So last but not least, let's see one more time where we are with the SPYs. If you guys want to list it, it's been back and forth. Down $1.19. Have a great day as well. And again, do we get below and stay below this area in the SPYs or not? Does Apple get below and stay below this area or not? Does Tesla lose some relative strength or not? Does money rotate in some of the other sectors? We'll see. And and then we'll just continue to act accordingly and try and do what we do. And if you're not at the highs of your year, big deal. This has been a very, very, I don't care what anyone says, it's been a very complicated trading year. Kathy Wood's been in a bear market for 18 months. The SPY's been in a bear market for 9 months. You have currencies going crazy. You have, a war that you don't know when it's going to end. You have, it just is a lot going on. So if that's the case, just take a step back and don't be too hard on yourself because that'll get you nowhere. Good luck today, guys. I appreciate you. Thanks for tuning in.